Wednesday, July 17. Highlight is all about market relationships. And I just touched on this, so it's like doing the highlight again for you guys, but consolidation boxes and correlation between markets that could and should and do influence each other. I'm going to tell you about 5. You should know this. If you're an S&P trader, NASDAQ, Russell, Dow, they're all indexes. They're all U.S. Stock indexes. Russell small cap, Dow is the 30 industrial companies, and NASDAQ's tech heavy, and S&Ps are 500 companies that make up those indexes. They're all U.S. stocks essentially, so they're going to chart similarly, and they might affect each other. Well, there's others. The DAX and Euro stocks are 2 German European stock indexes hosted on the Eurex exchange. They were 2 what I call flagship products of Eurex back in the late 90s that pioneered electronic trading in the futures industry. First 2 markets I traded, Euro stocks and DAX. The DAX is a thinner market in Eurex, more tech heavy. It's German. It's a German stock index made up of German companies. And Germany is kind of the economic engine of Europe. And the Euro stocks is, I think, 50 European companies. But let's go to the DAX real quick. And once in a while, I always have it up, but once in a while, someone will bring my attention that it's helping them more often than not. So we had a move lower. How could you anticipate, with you catching around, how could you anticipate a move that was going to reprice from all this chop and go lower? Well, you need some conformity among many indexes, and we didn't have that in the first 45 minutes. We actually had the NASDAQ, because of Amazon, another correlation, get a little strong at and after the open and kind of did this. They rallied with these pops, still stayed within the consolidation, but they had a nice rally where you didn't have it in the Russell and the Dow. They were weaker. So it was a tug of war, and it was, pulling the ES all over the place. All right. Well, let's blow up the NASDAQ again. The NASDAQ fell out of bed right in here. What could get you to anticipate a move lower? Well, first of all, we talk about consolidation boxes all the time. And if your eyes don't fixate on a chart like this would be one of the first things I teach if someone came to me and said, I don't know anything about trading and anything about charts. I'd say, okay, prices are over here, time's over here. Read that in the book. Don't bother me with that. But what I will show you is this has got to be on your eyes. Or your eyes got to make this yellow box, right? Your eyes got to see the several swing highs at the top of a range and the bottom of the range and the bottom of this range. And this was a box and this is a box and so on, and try to create that visualization without me having to draw it. So when they get through the bottom of this and this, they could have good follow through. Why? Because the people that were in that box who were long are swearing and yelling and being the ones chasing each other to make the price go lower. Price moves down or up quick and far, not because people are entering positions, but because people are trapped the other way and have to puke it, have to exit. The exodus of a trade, when there's a ton of people, is what drives a market up or down. Too many shorts, there's buyers, that makes it go up. They're all chasing each other to cover the position. Too many longs, they're all trying to sell it, chasing each other to hit price and makes price go lower because they're trying to get filled and they can't. Selling it doesn't make price go down. Trying to sell it does. So when you unwind a position, you have to sell it. When you want to get short, you want to sell it, but you don't have to. When you have to exit a long position, you have to sell it at some point, right? So you always stay a seller until you get filled. So an exodus in long positions generally is going to create big downside. So you're trying to get enough people stuck long before you anticipate getting short. And what makes a short trade a winning trade is you indeed got the longs to start selling it after you sold it or right when you sold it and trying to get a location. That's what we're trying to do. So you had this big down move at just after 9 Central. No coincidence that, number one, you could anticipate it based on the box I just drew. ES is waiting for help. And right after 9 o'clock, it had these consolidation lows and these swing lows to attack. It was waiting for the NASDAQ to come along for the ride. The DAX, which stayed weak, I talked about the DAX as the German company, right? Tell me that this isn't a consolidation box you could see before you see it move lower like that. So if I took this chart and I looked at it like this, like we did in the room, and I said this chart has a box where it's got sell stops below the bottom here. They start getting below there or above here, they should have some follow through, and it could help you trade another market. You don't have to trade the DAX to watch the DAX. You got to watch more than you trade. People make the mistake of analyzing the hell out of one market, the one that they trade, researching the hell out of the stock that they want to invest in or buy or trade. How about the sector it's in? How about the index it's in? How about correlated indexes? How about an opposite market like the yen? How about something other than just that market, right? Because the price of BMWs are affected by the prices of Mercedes. That's why they got cars in equal classes all the way up. Apples to apples, they're different, yet the same. So the DAX had that box. The bottom of that box is here. Look what they did. Sold it off pretty hard. Actually, that's the second one down. This is the first one down at 9 o'clock. This is the one we actually talked about. This long hockey stick in the bottom of this box, because it was like 85, we said. Look out below when it gets through 85. And right in here, it had its big move lower right after 9 o'clock. So you had anticipation of more than one market that was timing the downside, and a move eventually from like 04, 06, all the way down to like 96, 97. Or 93 rather. See right in here, we have this inventory. We'll talk about the heat map another time. For now, you begin to see consolidation boxes in ancillary markets. Take a look at this, just after 9 o'clock. You mean to tell me you wouldn't be able to see these bottoms get taken out? Please, you got to be able to see that now that I'm telling you about it. That's the Dow. How about the Russell? Sometimes the Russell's very important. And take a look at the Russell just after 9 o'clock. You know, you couldn't see, where was it? It's actually up in here, these lows. They didn't even get as weak, but they stayed weak and then really drove lower in through here. Again, the problem is most people don't watch other markets. Most people, if they're in other trading rooms, aren't having enough people with eyes and ears on stuff that matters. They've got people giving them information on all kinds of profile stuff. Well, they're all talking about profile, right? Or they got people all talking about a moving average, 208 cross. How about stuff that matters? And that's ancillary markets.